here.
At this time, I'd like to call to order the regular meeting of the Lincoln Way Community High School District 210 Board of Education meeting for Thursday, November 19th, 2020. Please stand for the pledge if you are able. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Roll call, please.
Mr. Janik?
Here.
Ms. Janice Doyle?
Here.
Mr. Kirking? Here. Mr. Lasine?
Here.
Mr. Lucetti? Here. Mrs. Stokes?
Here.
Mr. Costick?
Here.
Hello.
Hi, Dave.
You can hear me? Can you see me?
I can hear you. I cannot see you.
Oh, let me put my,
Is there a platform we can log into?
All right, do we have anyone signed up for public comments?
No, however, on the agenda for public comment, I provided a response to Mr. Barnes from last week. I spoke with him earlier this evening. If he has any other questions, I asked him to give me a call, and I'd be happy to meet with him, sit down, or answer any other questions he may have. I did indicate in December, the administration is going to bring back kind of a true up of where we are with student fees, outstanding student activity fees, and parking fees, just for discussion. But we'll be doing that once we're at the halfway point of the school year.
Thank you. Moving on, for presentations, curriculum and instruction update.
We have, I'm going to ask that you don't open the content. We're going to try and run it here on the big screen. And then if you have any questions or want to view it later, you can. Dr. Fury did a voiceover on the PowerPoint. So we'll see how this works and go from there.
Director of Curriculum and Instruction with tonight's board goal update. Board goal number 2 states that Lincoln Way will provide high-quality instruction for all students in an equitable, caring, student-centered environment. One of the objectives under this goal is to provide social-emotional learning and support during all models of instruction, especially where we are now with blended and remote learning underway. COVID-19 has affected our students both directly and indirectly, including their social, emotional, and mental well-being. These effects are related to changes in the routines, breaks in the continuity of learning, missed significant life events, and a loss of security and safety. Recognizing these effects last spring, Lincoln Way initiated a social-emotional task force made up of our PPS directors and social workers. This team researched, worked, and planned during this past summer to ensure that our fall had more social-emotional supports in place. One of the first decisions made by this team was to partner with Panorama, a social-emotional data platform. This allowed us access to surveys, data management capabilities, and resources for support. Although Panorama also offers college and career readiness tracking, school climate, student voice, and equity surveys, resources, and support, we knew that particularly at this time that it was most important for our team to begin with addressing the social-emotional needs of our students. So within the first few weeks of blended learning, the team administered a back-to-school survey to nearly every student in the district. Through these survey results, our team was able to study responses and data to look at both building and district trends and learn directly from our students about their immediate needs. For example, from the survey results, it was clear that during remote and blended learning, students self-reported that they were having difficulty with time management, as you can see here. Among several actions to address student time management, our PPS departments also created and distributed a newly designed planner specifically addressing the blended remote learning schedule. Another significant data point from the back-to-school survey was the students reporting that they were not receiving enough help with schoolwork at this time. Again, among several actions to address this, it also resulted in a revised remote learning schedule that allowed for more time for students and teachers to connect for extra help. In addition to district and building data, we can also drill down to individual student data to identify and address individual student needs. For example, survey results showed that many students district-wide responded that they did not feel that there was an adult at school that they could go to for help. Drilling the data deeper, we were able to determine that most of these students are freshmen, and so we distributed this information to counselors who reached out to each of these students over the next few days. The back-to-school survey results have been very informative and useful, especially in light of our circumstances this fall. In addition to continuing to address the needs of our students based on this survey, our Social Emotional Task Force team is also preparing the next survey that will even more specifically measure our students' social emotional competencies to proactively identify and support students. In this way, students' social emotional strengths and challenges will be identified and addressed by our task force throughout the school year. Presentations, group meetings, as well as individual conferences will all be put in place to guide and improve our students in their social emotional learning and well-being. With the survey given to these students on an annual basis, we will also be able to track students' social emotional growth as well. This is certainly an unusual time for our students, and so we are very proud of the work our Social Emotional Task Force is doing at this time. Thank you.
And I do think our counselors and our social workers are doing all they can right now to continue to connect with those students. We utilize title funds to purchase the panorama, and something we'll continue to utilize and work its way into college and career readiness, which will eventually be back on the Illinois State Report Card once we work our way through the pandemic.
Thank you. Fiscal year 2019-20 audit reports.
Good evening, everyone. Thank you for having Dave and myself tonight to present the fiscal 20 financial statement audit. We are going to do this a little different this year. So if you give me 1 minute, I will share my screen with you so that you can see the PowerPoint presentation.
Hi, everyone. Again, thanks for having us remote tonight. And I just want to say that once again, the district did a great job preparing their books for us to audit. Brad and Kelly and the rest of the staff did a great job. They're very professional, and they work very hard, and they take everything very seriously when it comes to the audit. And I also wanted to mention that Katie, who's going to do all the talking tonight, who was last year was the manager on the job, is now a partner with our firm. And so congratulations to Katie on becoming a partner. And so she led the audit, and my role was somewhat reduced to just a review partner status. And I'll let Katie take over from here.
All right, thanks, Dave. All right, so hopefully everyone can see the PowerPoint. Again, my name is Katie Napier and Dave Meyer here to present the audit for this year. Before we get started, a little bit about our firm. Founded in 1957. We're based in Will County. We provide assurance services, tax prep services, managed accounting. There are 5 partners currently at our firm, 2 of which are Dave and I. Just a little background about myself. You can kind of read through. I won't spend much time on, and a little bit about Dave as well. But before we actually get into the actual financial statements, I want to give a brief summary of what we actually do when we come out and audit the district. So we'll look at various things. We'll look at cash. We'll test your bank recs. We'll test property taxes. We'll confirm with the county that all the property taxes were received, that they were allocated to the proper funds based on the levies. We'll look at payroll. We'll reconcile the payroll expenses to the 941s that were filed. We'll do some individual payroll testing where we look at individual paychecks and we traced it back to board-approved contracts. We look at the debt payments. Does that agree to the amortization schedules? Does interest expense seem reasonable? We'll look at expenditures. We'll select invoices to test where we trace what was paid to the actual invoice and support and make sure that was properly approved. And we do all this because our responsibility as auditors is to give an opinion. So that leads into the first report that we'll be talking about, which is the annual financial report. That's the bigger report in your packet, usually around 100 or so pages. And the independent auditor's report actually takes up 3 pages. It's a lot of words, but can pretty much be summed up in 1 paragraph, which is the opinion paragraph. And the opinion given for Lincoln Way's financial statements was in that first sentence: the financial statements referred to above present fairly in all material respects the financial position under the cash basis of accounting. So that what that really boils down to is it's an unmodified opinion, which means it's a clean opinion, which is the opinion that you want, the best that you can receive. As we go from there, I pulled out a few things from the management discussion and analysis section. That section really is a summary of the financial statements themselves. I do reference on there in the actual financial statements where these pages can be found if you did want to look at the actual report. But this right here, this is the net position on the modified cash basis. And so what that is that's government-wide. So that's more than your funds. That also includes capital asset activity and your long-term debt activity. And it compares that from what happened in the prior year. So as you can see, total assets of the district increased by about $3 million, ended at $186,517,253. If you kind of look down that schedule, long-term or total liabilities decreased from the prior year, ended at $251 million opposed to $263 in 2019. And then the net position ended at a negative $37 million, which actually was an increase from 2019 of about $9.8 million. And I also do want to point out, if you look at that restricted portion of the net position, that also increased by about $4 million. So that's the money that can be spent on however the district chooses. It has no restrictions to it. If we look at this next slide, this is the actual, just the funds. So it's not the government-wide, it's only what actually happens throughout the year in the actual funds. So the net change overall in fiscal 20 was a positive 4.6 million, which ended at $28 million fund balance for the year. I think it's important to point out that all funds other than the capital projects fund had a positive net change, which the capital projects fund was just spent down to zero through the year. General fund had an increase of 2.9 million. The general fund is made up of 4 different funds, which is the educational fund, O&M, working cash, and your tort fund. And then as you can kind of see, go down, all the other funds as well has positive net changes. If we look a little deeper into the general fund, we can kind of look at a little more in depth of what happened throughout the year. And that schedule, or that table at the top, you'll see total revenues received. Fiscal year 20 was 117 million, opposed to 113 million in 2019. So that's almost a $4 million increase. And we kind of detail out at the bottom there how we got to that increase. So the types of revenues received that increased were state grant payments, federal grant payments, pupil activities, and the on behalf payments. A little bit of that, I think there was some different reasons for each of those increases, some being timing differences, others being formula changes. There was, similar to prior year revenues, was property taxes, CPPRT money, which is the replacement taxes, tuition, earnings on investment, and other revenue. Those held pretty steady from fiscal 20 to fiscal 19. And then a few that decreased from the prior year, which I believe would probably be expected given the pandemic and how this year has come to be, would be the food services and the textbooks. I do want to point out, I know we have talked about this in the past, but just the on behalf payments. So that actually made up 35.6 million of the revenue. That's not cash in and out. That's just contributions made by the state for TRS and THIS on behalf of the district. So if you take those out, that's not actual cash money received. You'll actually see those, there's revenues on this side, but then there's also expenditures on the other side. So it's actually a net change of zero in your fund balance. But if you take those amounts out, fiscal 20 ended with total revenues of 82 million, and that's opposed to fiscal 19 total revenues of 81 million. So without the on behalf payments in there, the change in the revenues from fiscal 19 to 20 was more about 1 million increase. General fund total expenditures, fiscal 20 was 114 million, opposed to fiscal 19, which is 107 million. So that's a $7.4 million increase. Most expenditures were similar to prior year, as you can see detailed out in the line below the table. Instruction, support services, community services, payments to other government, debt, interest, and fees all stayed pretty similar. The ones that did increase were the on behalf payments. Again, that's not a cash flow. That's more of a, you'll see it on the revenue side and the expenditure side and the capital outlay. If we took, again, those on behalf payments out of there, you're looking at more of total expenditures for fiscal 20 of 79.1 million, opposed to 74.6 million in fiscal 19, which was more of a $4.5 million increase rather than the 7.4 with the on behalf, which really stems from the increase in the capital outlay. And we'll get to a little more detail on that, I think, in the next slide. So So this is the capital asset outlay footnote for this year. I just wanted to, you can see how much the district actually spent on capital outlay. A little or close to about 5.5 million in additions. I know there was some big projects throughout the year that included the tennis court replacement and the turf replacement and camera installation, just to name a few. If we keep going, the next note that I thought was of importance to note was the tax anticipation warrant summary for the year. So I think this is the first year I know that we've been doing the audit that the district actually had a zero balance in tax anticipation warrants at the end of the fiscal year, which I think is a great success for the district. There was 12.9 in additions for the year, which I know is very much lowered than when we started. I think when we started, it was in the closer to the 20 million range. And there was 4.6 in repayments throughout the year. So I think that's a great thing to touch on. The next note is the long-term debt summary. As you can see, the district ended with 220.6 in bonds payable at the end of the year. There was 21.7 in additions, 9.4 in retirements, and 22.7 in refunding. And if you look down at the bottom where it's the current year refunding, I also thought it was important to note, why you actually do refunding or how it benefits the district. If you actually look at that last line, or 3 lines up from the bottom, the refunding of the bonds resulted in a decrease of total debt service for the district over the next 14 years of about 2.1 million, which is another great thing for the district. A few things I just wanted to touch on in regards to the single audit. So what you're looking at here is the schedule of expenditures of federal awards, also known as the CFA. I have a few arrows pointing to some numbers at the bottom there. You can see it's pointing at 2.4 million. So that was expenditures of federal money. That's how much you expended in federal money, was 2.4. Once you get over the $750,000 threshold of federal expenditures, that triggers a single audit. We go through a series of steps where we have to pick programs to test each year, and those arrows on the right, and they actually have in parentheses an M, that means it's a major program, and that's the program that was audited. That's the IDEA program or the special ed, which is, as you can tell from the numbers in column F, that's the largest federal source of revenue for the district. So page 8 of the single audit is a great summary. It summarizes our auditor's results for not only the single audit, but of the financial statement audit as well. And if you just go down those numbers, you'll see independent auditor's report expressed in unmodified opinion, which again means a clean opinion. Number 2, no material weaknesses, no significant deficiencies, no instances of non-compliance. And then just on the federal award side, so on the IDEA grant that was selected for testing, again, unmodified opinion, no material weaknesses, no significant deficiencies, and no findings were found regarding that program. There's a few other deliverables that I won't spend too much time on. Communication with those charged with governance during audit planning, which is just a required letter that we have to send to each of our auditees. It's a boilerplate letter. There's not much involved. The other one is the communication with those charged with governance at the conclusion of the audit. What I did want to mention with that letter is it does have the proposed journal entries that were attached or that were made during the audit. So if you took the trial balance that the district gave, add in those journal entries, that's how you would get to the numbers that you see in the financial statements. I would say pretty similar entries made, nothing out of the ordinary from prior years. The last deliverable would be the management letter. There was one comment that was removed from the prior year, so that was corrected by the district. That was the development of the comprehensive policies and procedures manual. There was no new comments added in fiscal 20. And the 3 comments that remain on the management letter, again, management letter is just recommendations or opportunities for improvement, was the capital assets, having a third-party appraisal done, or utilizing the fixed asset module within Skyward. There was 2 funds that had expenditures in excess of budget, which were the O&M fund and the debt service fund. The debt service fund was just due to the bond issue costs involved with the bond issue in fiscal 20. And the last comment was just be prepared for the future GASB implementation for GASB 84. That was originally supposed to be implemented in fiscal 20, but they postponed that due to the pandemic. So that'll be something to look forward to in fiscal year 21. That was all I had. I just wanted to point out some, what I thought was important to note in these deliverables. If anyone has any questions or if there's anything I didn't touch on, please let us know.
Thanks for the report. My question is on the capital assets. I think from last year, part of doing the comprehensive policies and procedures, that we were going to address how we would handle the capital assets. So are we still on that?
So where we're at, we've really got 2 options, but the main issue isn't that we continue to track our physical assets and we give additions and deletions each year to the auditors. The issue is the historical data with which we're building on. In order to really get that accurate and to clear this comment, we'd need to contract with a company to come in and do a complete physical asset inventory of the district. We have actually looked at that. The cost of doing that's about $25,000 to $28,000, and at this point we just haven't moved ahead. But that's a board. If the board wants us to get moving on that, we certainly can. But it's not that we're not tracking current stuff. It's just the historical stuff is what needs to really be updated.
And I guess just on the other management item, the change in accounting for student activity fee, student activity accounts. Are we going to have to implement anything here from an accounting standpoint differently?
No, actually, we're already using the Skyward student activity accounting system. So it'd just be a matter of at the end of the year bringing that onto our financials. So it'd be reported. When we did the budget, it's kind of minor, but we actually, ISBE, in preparation of this being implemented, had adopted that into the new budget form. So we've actually moved those items, if you will, budget-wise, onto our books. And so whenever this GASB gets implemented, we'll be prepared to go ahead and just record them onto the audit. It's not, we're tracking them just in a separate system. We'll just combine them, if you will, kind of like like in a corporate, you have two different entities, you're gonna combine them in your reporting, and that would be the matter of what we'd need to do. So we're ready for that.
In terms of doing a physical audit, would that actually be someone coming into the buildings and counting desks, chairs, things of that nature?
Yeah, and also looking at all of our fixed assets and making sure, looking at historical costs, determining appropriate depreciation. You know, you understand the reason why this capital assets is kind of an issue for a lot of districts, not just Lincoln Way, is because prior to GASB, 34 or whatever the one, school districts had never tracked and depreciated fixed assets because we didn't have a need. We're not a taxable entity, and we didn't need to depreciate them on the same schedule like a for-profit corporation would need to. So that's the situation. Is it's also calculating out that depreciation. So our auditors have helped us. We've calculated out our depreciation to the best we can. One of the things that they would do if we came in for a full value, they would look at the historical cost and also the accumulated depreciation on assets.
Just one question for the auditors, or maybe even Brad can answer, I don't know. Deferred outflows for resources on assets, what is that? What's in that category?
What page are you on?
Page 7.
Katie, did you hear that question?
I'm sorry, no, we can't hear that great.
On page 7, the question is deferred outflows of resources. What does that cover?
I heard page 7.
Sorry, on page 7, deferred outflows of resources.
Yes,
What's covered in that?
that is, deferred amount on refunding of bonds. So that results from the difference in the carrying value of refunded debt and its reacquisition price. And that will only show up in the government-wide statements, not within the funds.
Any further questions? Okay, thank you very much. We appreciate the presentation.
Thanks, guys.
Great job.
All right,
and
thanks, everybody.
Thank you. And Brad and Kelly, great job. Thank you so much. And these are a lot more fun to look at than they were 5 years ago, huh? Okay, moving on to the health insurance for the district.
All right, Patrick, can you hear me okay? Yes, great. I'm going to go ahead and share my screen. All right, Patrick, can you hear me okay? Yes, great. I'm going to go ahead and share my screen. Patrick, can you hear me okay? Yes, great. Sorry, I have an echo going here. How's it on your end, Patrick? Are we good? Can you see my screen?
Okay, great. And I'm not getting an echo anymore. So I think we're good. All right, good to start, Patrick? Okay, thank you. Hello, everyone. My name's Dave Stum, and I think you can see both of us. Alongside of me is Steve Hogan, waving from Frankfurt. I'm in my Batavia house. Was reminiscing last time we presented to you was way back in February of 2020, and it seems like a decade ago, and how the world has changed since then. But again, we're here to talk about the health insurance program for Lincoln Way. And since we presented to you back in February, we've been super busy doing a number of different projects. The first project we did was commence the spinoff from the affiliation program and roll out all new insurance programs to all the Lincoln Way employees. And then after we completed that, then we set up a online enrollment portal called Employee Navigator, where all Lincoln Way employees can view their benefits and access information about all their benefit programs, and then also conduct open enrollment. And that's the third project that we're working on right now, is open enrollment for the Lincoln Way employees. So that's going on right now, so they can all make their elections for January 1st. And again, they're doing that all on the new online platform. So, but what we're here to talk about tonight is the performance of the program itself, educate you a little bit about how the benefit program works, and then also review the performance for the past couple of years compared to year to date, and then certainly answer any questions that you guys have. So weird presenting style for me, because I can't even see you. Normally when we're doing Zooms like this, you can see people. So Patrick, I'll just have to rely on you to unmute when you need to, and let me know if anybody's got any questions. Thanks, I got your thumbs up there. So with that, I'll jump into this, and hopefully you can see everything on here. But again, this should be in the packets that were distributed to you. But what we thought we'd do is first do a little education for you. So since that's what you're in the business of doing, is education. We thought we'd educate you a little bit about the program, how it works, and then also get into the details. So first, Brad thought it would be good if I introduced some terminology to you. Some the terms that we use on a daily basis that some of you might not have ever heard of before, or maybe you only hear once a year. So again, I wanted to go over some important terminology. The first one is the funding mechanism that's itself. So the program that Lincoln Way buys is a self-funded program that's different than a fully insured program. And in a fully insured world, and some of your employers might work that way, or other programs you've been on before, is where you pay a flat premium to an insurance company, like a Blue Cross Blue Shield. You pay them a premium each month, and then the carrier assumes the full risk. Whether you have any claims or no claims, the carrier has the full risk. Lincoln Way, however, has chosen a self-funded program, and most large employers do, in which you pay your own claims. But you don't pay all of your claims, you pay them up to a certain level, and we'll get into that later on. But what you do is you hire a carrier or administrator to pay your claims. In this case, Lincoln Way's hired Blue Cross Blue Shield for their medical program and Guardian for the dental, and under a program that's known as Administrative Services Only, or what's often called ASO. So again, you have self-funded program, Administrative Services Only, ASO. Those are all interchangeable terminologies, but that's what the Lincoln Way program is. When you're fully insured, you pay full premiums. When you're self-funded, you pay a number of different components that make up that second section there that says total costs. So I wanted to break that down for you and say when Lincoln Way funds their program, about 8% of it goes towards fixed costs. Those are amounts paid to the administrators, in this case, Blue Cross and Guardian, for administration, things like processing claims, customer service, 800 numbers, issuing ID cards, negotiating with the network, negotiating the best deals when Lincoln Way employees use medical or dental providers. And then there's also a component on the medical HMO for physician service fees, in which you pay a flat fee into the HMO, in which HMO providers then use that fee to manage their patients. So that's kind of the managed care component of the HMO. So those are your fixed costs. And then you also buy stop loss, and makes up only about 5% of the premium, but it's super important because that's your true insurance protection. And what you basically do is buy insurance so that any claims over $300,000, Lincoln Way would not have to pay. We'll get into that on the next page. And you also buy aggregate stop loss protection. We'll get into the next page as well. The giant piece of the medical costs are, of course, the claims. So about 87% of Lincoln Way's costs are claims. And of course, you fund those throughout the year. And then when you project for future years, underwriting reviews your past claim history and makes some minor adjustments for demographics and things like that. And then applies what we call a trend, what many people call inflation. So if claims are X in one year, it's X plus a percentage for the following year. So when you add those three components together, that makes up your total costs. They're often, and when you're projecting for 2021 or in past years when you've projected for the next year, those are often called premium equivalents, or at Lincoln Way we call them funded premiums. And the funded premiums kind of break down, or in the unit that we use is a PEPM number. So when you see that acronym, that PEPM stands for per employee per month. We basically take the costs, say on an annual basis, divide them by 12, and then divide them by the number of covered employees. And that gives you your unit cost. And that's what we use in our world to compare year over year so that you can see what the plan has truly done outside of enrollment adjustments, if you're covering more people or less people. So again, that PEPM is an important term for you to know. Once we've made the funded premium projections, they're used in 4 different ways. One, the most obvious one, they're going to fund the program. So when we set aside the projections for 2021, there's a dollar amount that's used to then pay for the Blue Cross Blue Shield or the garden expenses. The second item that it's used for, it's super important, is to determine what we charge employees. Employees on average pay 25% of the cost. And then we take those funded premiums, apply the 25%, and that's what we determine to charge employees for the next year. And then of course, Lincoln Way pays the differential, that employer portion, that 75% number. To a lesser degree, but still important, is they're also used to determine what we charge retirees when they stay on the program, as well as COBRA employees, anyone who terminates from Lincoln Way but still wants to keep their coverage. That's the national law that allows people to stay on their former employer's plan for up to 18 months. So again, 3 and 4 are to a much lesser degree, but still important. The last thing terminology I want to introduce you to is the loss ratio report. And we're going to show you a little bit of that, but that's basically our report card that we give the plan. And we can do that on an annual basis. And of course, when we're in 3/4 of the way through a year, like we are now, we can also use that to assess how the plan's been performing. So again, using some school terms, we call that the report card. And what we do is we say 100% would mean that you're running exactly as projected. If there are a number of those funded premiums, if you're running at 100%, you're funding perfectly. If you're running at 94%, you're below projections, which of course is a good thing, right? And there could be some monies left over in the fund. And of course, if you're over that, then you're running over projections. And so this report that we're going to walk you through now that we're consulting for Lincoln Way, and we're going to be looking at it on a quarterly basis, we're going to walk you through that. And so again, we'll see that each quarter. But I want you to understand that it kind of comes with kind of a 2-month lag. So we're sitting here in November, but we're going to be talking about claims through September. Because once September month ends, then we get that report from Blue Cross Blue Shield about a month later in late October. And we put that into our report, and then, of course, share it with all of you, and then we can present and here we are at a November meeting. So again, we'll always be looking kind of at a 2-month lag. I'll pause there just to catch my breath. Anybody have any questions on that terminology? Patrick, just give me the thumbs up if you're good for me to proceed. All right, we'll keep moving on. So the next page introduces you to a couple of insurance terms. and that's stop loss protection. And we thought it was important for you to understand that when we are now outside of the affiliation and we're on our own, there still is a lot of ways that Lincoln Way is minimizing your risk. And the biggest piece is individual stop loss. And that's where you can see on that first check mark there, individual stop loss protects Lincoln Way against individual high cost claimants. And we've selected a $300,000 deductible for 2021, which is next year. It's the same that we have in this current year. And what that basically means is that, let's say an employee's spouse incurs $1 million claim, that Lincoln Way will only pay up to $300,000. That's that ISL deductible. And then the remainder will be paid by the stop loss carrier, which in your situation is Blue Cross Blue Shield. So in my example, Blue Cross would pay $700,000. The premium for that for next year is projecting about $430,000. That's actually paid on a PEPM basis. And so of course that number will fluctuate based on enrollments. If Lincoln Way hires more faculty and staff or decreases, that adjusts on a monthly basis. But again, projecting about 430, which is about 0.5% higher than it was in 2020. And then just some side commentary is that individual stop loss claims are often paid out. It depends on how high or low that deductible is. And we just thought we'd give you some history that no stop loss claims have been paid out through September 30th this year. And then further, no PPO claims hit that stop loss level in 2018 or in 2019, but there was about a $45,000 stop loss on a couple of claims on the HMO back in 2019, none in 2018. So again, maybe the most important way that Lincoln Way is protecting themselves for those big swings is an individual stop loss. To a much smaller degree, but could actually be a bigger payout, is aggregate stop loss. And that's where Lincoln Way protects against just a catastrophic year and where you just had horrible overall claims. And so what we do is we're buying stop loss on anything over 130% of what our projections, same as in 2020. So for example, our claims for 2021 are projected at just over 7.5 million. You can see 7.57. Again, that's talking about that same enrollment levels. If the claims run horribly, right? Not just $1 million claim, because you're only gonna pay $300,000 on that, but if you had 10 $300,000 claimants, right? That could add $3 million onto your overall spend. And what we do is we insure anything over that 130% projected number. So if claims ran at $10 million, for example, well, Lincoln Way would cap out at about 9.84, which is 130% of projected. And in my example, the remainder, that $160,000 would be paid for by the insurance company. Aggregate stop loss is a much lower cost item. You can see above, we were talking about a $400,000 premium for individual stop loss. On aggregate, it's under $5,000. It's $4,800 projected for next year. That's actually a decrease from what you paid in 2020. And that's because it's very rare that they're paid out. I could tell you in my career, I've probably seen aggregate stop loss claims paid out, I think, once. I like to call that sleep insurance, though, that $4,800. You know that if we had 10 claimants that all had $300,000 in claims, we'd be okay. So again, I thought that was important to stress that while we step outside of the affiliation, we still have protections both on a catastrophic aggregate basis as well as on an individual basis. Any questions there? Patrick, want to give me another thumbs up? All right. And now how you know how your teachers are performing when their students don't have their e-learning cameras turned on. So now getting into some performance, we have two slides here, one that speaks to the medical plan and one that speaks to the dental plan. Medical is obviously the much bigger ticket item, and what we have done on here is shown you really the best, the current year and then the 2 years prior. And in 2018, you funded about 8.68 million in claims, and there's that PEPM number, about 1333, and you actually paid out about 7.27 in claims and fixed costs. So your loss ratio was good. It was about 84%, and you had a giant surplus of $1.41 million that kind of went into a surplus kitty that had been being built up over the years, and we'll come to that later on. 2019 wasn't as advantageous. You funded about $8 million, and that's was lower than 2018 because you took that premium holiday in December of 19, which is about $700,000. So again, otherwise those numbers would have been pretty close to each other. So you funded at the same levels for 2019. Your actual cost came in about 8.16. Again, a lot of that, it's looking like it ran at about 102% loss ratio, but part of that was by design because you didn't fund that last month in December. So I had about $160,000 deficit, but again, because of the surplus that had been built up over the years, we really didn't feel that, I'll say. 2020 year to date, kind of a crazy year to say the least, right? Back in February, everything was looking normal and you were paying claims as usual. And then you had a giant drop in claims because we had the stay-at-home order. No one could go to the doctor for non-emergency situations. So really all that was being paid out in March, April, and May were prescription drugs, which is still a big piece of things, emergency claims, and then, of course, any hospital admissions that were not elective. But again, still a big drop for those 3 months. And then in July, August, and September, claims have picked back up for a couple of different reasons. One, that people could come back to the doctor to begin with. There were a lot of, I'm going to say, reschedulings or makeup appointments that were pushed through in that window. And then as well as we also, because we converted over to the standalone program, we also had a little bit, 1 or 2 months where we had, I'll call it double administration costs because the affiliation was paying out your runout claims. Meanwhile, you had started back up with your new program. So we'll show you that later on. But the good news is that despite that, we're still running well, about a 96% loss ratio through 3 quarters and really through September 30th. So right now, we're about $290,000 to the good. We'll see how that continues to track out for the remaining 3 months of the year. Wanted to stay high level and talk about the 3 years, and then I'll pull up the detailed reports in a second. But I also wanted to show you the same numbers for dental. So if I jump to the next page, of those of you following along, this is the Guardian Dental Program. And you can see the numbers are significantly smaller rather than, $700 or $8 million numbers. We're talking about $600,000 funded premiums in 2018, only about $80 per employee per month rather than $1,300. Actual costs were about $624, so you had a little surplus to $21,000. 2019 claims, the funded premiums were lower again because of that premium holiday. Claims were higher. They spiked in a couple of months, and in total you ran much higher than the funded projected levels, to the tune of about $193,000 deficit. But again, because of the good performance of the medical program from the prior years, you had that kitty built up. I don't think that was really felt by Lincoln Way. And then year to date, so far, we're running almost on track, funded about 483, and we're running about 492. So about 102% loss ratio and running $9,000 over funded levels to date. And again, we'll show you those details on that. So those are the kind of the high level summaries. And so for each of those 3 years, this report that we passed out was 11 pages. So the remaining 6, we're on page 5, the remaining 6 pages are, 18, 19, and 20 for the medical, and 18, 19, and 20 for the dental. Just jumping into those, maybe make this a little bit bigger if you're following along on our screen. This is what we call our report card, right? I gave you kind of the high level summary. This is the details. This is the Blue Cross Blue Shield program for 2018. So we like to have fun with colors. The blue section represents your Blue Cross Blue Shield costs, and the green side is the funding, the money that Lincoln Way sets aside to pay for the program. This yellow number right here, there's a lot of numbers on this page. I usually tell people if you want to just look at one number on the page, it's the one in the yellow down here, which is your report card. How are you running? Are you this particular year, you ran at an 84% loss ratio. And down here, we ran $1.4 million to the good versus the funded premiums. Funded premiums, again, in the green here, shows it on a monthly basis, 8.7 versus paying out costs at 7.2. So we have that report card for 2018. There's the 84%. And then jump in, this is 2019. That's indicated up in the top right corner. There's your report card at 102%. It also factored in that premium holiday. So that actually would have been, if we had funded that particular month, we would have ran under for that year as well. And now, this year, and we can spend as much time on this slide as you want. As I mentioned before, the loss ratio at 96%, we funded about 7.1 million and paid out about 6.8. So there's that surplus that we have so far, about 290,000. In here, you can see the funded premium levels. You can see, of course, are consistent each month. But this column here reflects what Lincoln Way has paid out each month. So you can, this is where you can see some of those drops during the COVID months. You know, if you look back last year, you spent about, call it $700,000 per month. This year, you were at $850 for January, $600 for February, and then we hung out at 600 levels for a while, and even 500 in May, 600 in June. And now we started to ramp back up. Now people could come back to go back to the doctor. So we're picking up a lot of those made up claims. We also had to pay out, that's what's asterisk here, that we also had to pay out the affiliation to pay out our run out fees. So there's some administrative costs in there. And now we expect things to start leveling out. You can see here in September, we're kind of back to those normal levels at $700,000, $760,000. And in the blue section, that's your fixed costs. You can see those have leveled back out to the amounts you should be paying going forward at about $123,000 for your fixed costs. One other thing I wanted to make sure is super important, might be the most important number in the entire presentation of ours, which is the balances as you sit to date for September 30th from the affiliation, that you had two significant payments. I think it was two, maybe three payments of $6.5 million. So that's that piggy bank, that kitty that you had built up over the years by, I'll call them conservatively or overfunding the premiums that like we did in 2018 when I showed you that 1.4. So you got two, I think it was two payouts, and Brad can correct me on that. I think it's two checks, maybe three, to the tune of $6.5 million. And that still leaves a cookie jar, a piggy bank of $839,000 to continue to pay out any of those claims that were incurred under the affiliation prior to the July 1st changeover. So we'll pay those out for the remainder of the year and even into next year. We would anticipate there'll be some money left over in that piggy bank. It will depend on the activity coming through for any claims incurred before July 1st. So that's the three medical reports. And then smaller scale, but still important, is the dental report. So this is the 2018 dental report at that 97% loss ratio. And then the 2019 ran much hotter than anticipated. Also had the premium holiday in there too, so that accounted for some of that. And then now this is this year where we're running kind of right on point. You can see similar pattern on the dental claims where you were 70,000 for the first 2 months of the year, dipped into 50 for March, and then we ran at 19 and 13 for May and June, or excuse me, April and May, ramping back up in June to 47. And now we're kind of back at, I'll call them more normal levels, again, tapering off in September. So again, we're hopeful that that will continue for the rest of the year. That is everything that I had prepared to go through. So I will open it up to questions again. Patrick.
Any questions for Dave?
Sorry. You know what? Now I see what Katie was going through. When I was watching on YouTube, I could hear you just fine, but on the screen share, for some reason, I think the mic must be too far away. So could you repeat that or again? No questions. Oh, no questions. Even better.
We might have one. Hold on, Dave.
Okay.
So just to make sure I understand this correctly, whatever we're funding, basically our maximum is that we could potentially go over that by 30%. So the
Correct.
aggregate kicks in at 130. And this is on a calendar year basis, correct? It doesn't match up with our fiscal year?
Correct, because the benefit programs renew for January 1st. Deductibles run on a calendar year basis, both for employees and their dependents when they go to the doctor, right? Those calendar year deductibles, as well as then Lincoln Way's deductibles run on a calendar year basis as well.
And so then the last question is when they're figuring out what the doing the underwriting for the next year, let's say you did have a bad year, okay, it doesn't go up to 130, but it was 20% over. How much of an impact does that have going into the following year when they set the budget? Do they look back like 3 years and kind of average it, or do they really focus on if you had a year where your claims increased considerably?
Yeah, that's actually a great question. What Blue Cross Blue Shield's underwriters do, and then we review that and double check it, and sometimes we'll challenge it. They will look at the last 2 years, and they'll put 2/3 weight on the most recent year and 1/3 weight on the previous year. In the insurance world, in the medical insurance world, anything further back than that really isn't concerning to an underwriter. Whether you ran at $10 million or $2 million, they say all those health conditions from 3 years ago really have turned over. And so they look at your, again, 67% weight on the last 12 months and 1/3 weight on the 12 months before that. Good question.
And then just the aggregate stop loss, does that only kick in, like in this example, once we were to hit, I'm sorry, maybe not the aggregate stop loss, like the stop loss on, the aggregate stop loss. Would that only kick in at once you hit the 130%, or is it kind of average? Like if you got hit with multiple big claims in the beginning of the year, you'd still have to pay those out. It doesn't kick in until you hit that 9.84 in this example.
Correct. Yeah, it's more on an annual basis. Again, I've only seen it happen like once in my career. So I wouldn't anticipate it. And yeah, if you had a horrible month, I think what you're asking is if in January you ran at 150%, yeah, they'd expect then the claims are going to trickle back down over the next couple of months and it should smooth out. It's not like you'd be capped at that particular month. It's an annual review.
Any further questions for Dave? How about Steve? He's been so quiet tonight.
Dave and I are a great team.
Thanks, guys. We appreciate it.
All right. Thank you all. Thanks for what you're doing.
Thank you. Have a good evening.
Have a good night.
Okay, moving on to the consent agenda, which includes approval of the regular meeting minutes of October 15th, 2020, approval of the payrolls of October 20th and November 5th, 2020, approval of the District 210 advisory minutes from October 12th, 2020. Does anyone wish to have anything pulled from the consent agenda for discussion? Okay, with that, I'd entertain a motion to accept the consent agenda as presented.
So moved.
I have a motion and a second. If you could open the vote, please.
Who made the second?
I'm sorry.
Oh, thank you.
Oh, sorry.
The vote is open.
Thank you.
Oh, now it is. The vote is unanimous. The motion passes.
Thank you. Moving on to the action items. Presentation of invoices for October 16th, 2020 through November 19th, 2020.
Motion to approve the invoices in the amount of $2,667,475.03 dated November 19th, 2020.
Thank you. I have a motion. Do I have a second? I have a motion and a second from Mr. Lacine. Any discussion? If you'd open the vote, please.
The vote is open. The vote is unanimous. The motion passes.
Thank you. The treasurer's report for 2020, October.
Yes, thank you. So for October, the district received revenues of $4.1 million, while we expended $6.5 million, bringing our actual cash balance to $51.7 million. We have no outstanding TAWs, so that also equals our current fund balance. For cash flow, this is monthly cash flow. I had projected that we might collect more revenue than we actually did, so we had a negative variance there. But I also had expected expenditures to be a little more normal, and so we had a positive variance there for overall $325,000 difference in where we thought we'd end the month on a cash flow basis. As far as year-to-date, the district continues with its strong financial position. We are currently $16.8 million ahead of where we were a year ago at this time. 6.5 million of that, I should remind you, is the two payments we received from the affiliation for the returning of the surplus from the health insurance affiliation. As far as revenue goes, we are tracking 1.9% behind prior years. A little of that is to do with we are about 0.6 lower tax collection. But really, the more of it is we've got interest income, student activity, student fees, athletic fees, lunch sales are all trending below because of the COVID pandemic. Noteworthy things I want to bring up on revenue. Interest income is not going to recover, even if interest rates would have to skyrocket, which they're probably not going to do. So I'm estimating we could be $300,000 short on the budget on that item. Admissions, athletic fees, and student fees are trending well below. We know we're going to have probably less athletic things as things are being canceled, et cetera. So we're estimating about $500,000 down there. And then finally, food service, until face-to-face instruction resumes or when we really be having a robust program again. So we're estimating for the year about 1.9 million. Overall, 2.8 million less in revenue than we're expecting. That's our best estimate at this point. The good news is expenditures are also trending, as you can imagine, down. So we're 4.4 below. A lot of that is to do with lower salaries and benefits, mainly salaries, but also some other areas. Overall, when we look at all expenditures, we anticipate to be under budget by a little more than around 3 million or more. So we expect to be able to hit the budgeted surplus that we've set in there and still meet our fund balance 420 policy. Any questions on the treasurer's report?
So I was looking at the expenditure you're projected for the year, assuming COVID quarantine continues and comparing it to revenue. And just looking at where we're at from the budget so far and only paying down about, expenditures are about 28%. Typically, they would be 33% at this time. So we're running about $5.5 million ahead on expenditure side right now. And normally when I look at it, unless we know some big expense getting paid in a different period, it's usually running at that pace, about 33%. It runs pretty closely. And you can see that here. Last year it was at 33.8. So what do you think is going to increase from expenditure standpoint going forward that we wouldn't be like 5 to 6 million better?
Well, at this point, it's hard to predict. I mean, whether we end up going blended or coming back more
Well,
full.
but this was based on COVID.
Right, it is, no doubt. But what I'm saying is, it's hard for us to know what second semester might mean. So, I agree with your analysis. I'm being a little conservative when I say I think we'll be under 3 million. But we don't know what second semester will pan out to be, and if expenditures would be more back to normal. So far, expenditures have been trending well below. Some of that's to do with salaries. We're not having the additional costs that we normally would. And there's some other things, like, officials and game workers. And I mean, there's quite a list of positions that we're not having to use. But we don't know what second semester is going to fully look like. So there's where we're kind of trending at the moment.
Also, a significant impact there would also, the travel, transportation, everything's lower. If we don't have the sports seasons in the spring, you're right, Chris, we're gonna be well below, because that's workers, officials, and that's quite a bit.
Any further questions regarding the treasurer's report? With that, I'd entertain a motion to approve the treasurer's report as presented. I have a motion. Do I have a second? Second by Mr. Janik. If you would open the vote, please.
The vote is open. The vote is unanimous. The motion passes.
Thank you. Moving on, student activities report for October 2020.
Included in your backup materials is the student activity report for the month ended October 31st. Total student activity fund balance is $2,100,761.17, with revenues of $134,055.35 and expenditures of $103,610.47. We had one account in the negative, that'd be Cheerleading Central, and once again caused by timing differences, and should be resolved by the end of the month as proceeds come in for those fees.
Thank you. Any questions regarding student activities? With that, I'd entertain a motion to approve the student activities report for October 2020 as presented. I have a
Second.
motion. And a
Second.
second by Mr. Janik. If you would open the vote, please.
The vote is open. The vote is unanimous. The motion passes.
Thank you. Moving on, personnel.
All right, under personnel and employment, we have Carrie Abrahamson, paraprofessional, Nick Albergo, bus driver, Katrina Cimaroli, SAD head sponsor, Gina Corrali, speech head sponsor, Joe DeBose, bus driver, Sarah Cause, bus driver, Darlene Neal, bus driver, George Oakley, bus driver, Eric Ream, drama club stage manager, and Jennifer Winker, bus driver. I ask the board to approve the employment report as presented.
Thank you. Any questions regarding the employment report?
We're getting better.
Looked like it was a little better this month, huh?
Yeah. No,
Well,
we're
I think
good.
there was a lot more
We're
on
good.
the higher list than there were on the resignations list this
Yeah,
this
no,
month.
when we get to that list, it'll look a little bit better. We're definitely in the positive on this end. We have more apps that Mr. Leone will be interviewing some of those candidates sooner than later. The good part really about this, the names I read here, many of them are already licensed. Some of them actually are returning to us that had left to try some other things, and now we're back. So that's a good thing.
Excellent. With that, I'd entertain a motion to approve the employment report as presented. Mr. Kirking and Mr. Lucetti with the second. If you'd open the vote, please.
The vote is open. The vote is unanimous. The motion passes.
Thank you. Moving on to resignations and leaves.
All right, under resignations, we have Maria Jones, bus driver, Brian Mulford, math department chair, Lincoln Way Central, and Rachel Winkler, speech pathologist, Lincoln Way East. I ask the board to approve these resignations as presented.
If you would open the vote, please.
The vote is open. The vote is unanimous. The motion passes.
Thank you. Retirements.
And under retirements, we have Tim Daly, guidance counselor, Lincoln Way West, is asking to retire June 30th of 2025. I ask the board to approve this retirement as presented.
Could I have a motion, please, to approve the retirement as presented?
So moved.
I have a motion. Do I have a second? Mr. Kirking with the second. If you would open the vote, please.
The vote is open. The vote is unanimous. The motion passes.
Thank you. Moving on, resolution to allow the benefit protection leave for IMRF participants.
I got this. Wasn't sure which one of us were going to take this one. So this is something for our IMRF employees to protect their service credit when they go on leave. So they go on leave for a variety of reasons. If it's injury, if it's illness, whatever it may be, this is a way to protect their service credit. Because if you go too long, more than 30 days without earning wages in IMRF, you could lose your service credit. So this is a protection that put in place, and especially in this time of COVID, which we do have some of our IMRF employees taking leaves at this time, where it doesn't cost the district much money to allow them to protect their leave, and the employee still has to pay their portion of their IMRF during that time. So this is a nice benefit we can offer to our staff that are IMRF qualified when they're on leave to protect their pensions. Or future pensions, I should say.
You said it doesn't cost the district much money?
Well, it costs us our portion of their IMRF. So whatever that is, which is already rolled in typically we're paying for it. I think our current rate is 12.5%, right, Brad? So.
Of salary.
Salary.
12, right.
Yes. You know, these are employees such as our bus drivers, parapros. Yeah.
Does TRS have something similar to this?
No.
No.
Do you know about how much it costs? Do you have a total of what it would be?
What it would be, it would just all depend on how many employees take advantage of it. Currently, I believe right now, Linda, correct me if I'm wrong, we don't have anybody that is taking advantage of it. This is just something that we want.
We don't have anyone, an employee has 3 years after were gone on a leave or something to apply for the benefit protection leave. So the calculation is done at that time of what money they were making.
So this could be retroactively, so someone who took a leave up to 3 years ago could come
Yes.
back and claim. So do we know how many people have taken a leave in those 3 years?
Well, or does this,
Very few.
is this from this day forward? Or does it,
Yeah,
I think that's where my question was gonna be.
Well-
So does this mean like tomorrow if somebody gets furloughed, they're covered under this, or somebody that was furloughed 2 years ago?
This is if we go from this point forward, from the approval of the resolution. Is how I understand how this would work. Go ahead, Linda.
Thank you. Usually, if someone files a benefit protection leave, and they have in the past, it comes to the board each time for each employee. This would allow a blanket over the employee, so it doesn't have to come to the board each time. That's all that this does. This resolution just allows that. So a person could file the benefit protection leave, and then the IMRF would accept it without board approval because we would have this resolution in place.
So when we approve a leave for someone on IMRF, normally, the normal course, are we approving this benefit protection?
The potential for that, yeah. And I think this is my 7th year of doing this. I've never, yeah, 8. Time flies when you're having fun, I guess. I've never brought one of these to the board, but we felt with COVID going on and some of our staff, just because of the various reasons why they're taking leaves, this would be a good benefit to have if people called on it. And that's a big if.
It is a good benefit. I just want to make sure I understand it. Just, and again, this doesn't need to be the hairball that it is. How much does the employee pay of their percentage of salary?
4.5%.
Yeah.
So they pay $5, we would pay $12, or $4.5, we would pay $12.5. So that's a pretty decent return right out of the box. And if we approve this resolution, is it like forever? Or is this for a 12-month period, or how long does it last?
Well, it's until rescinded.
So that would be forever.
Well, okay, but remember, the employee can only apply for up to not to exceed 12 months. And they have to pay, at the time their application is approved, they have to then pay in their portion to IMRF, which quite honestly is a deterrent for a lot of people to apply for this, because they don't want to have to pay up the cash up front.
And these are going to be employees that are going to be vested into the system. Now, depending on what tier you fall in, most of our employees now, most of them are falling into tier 2. So that means they've been with us for at least, or in an IMRF position with continuous service for 10 years.
So would we be able to see some sort of report if we did approve this of the number of people, like
Oh, yeah.
a year down the road or a quarter, every
Oh, yeah.
quarter?
Yeah, because we'll have to
Because if we're approving the resolution, then it'd just be as simple as doing some accounting on the financial department to make the payments, but I don't know if we'd necessarily be able to track that without a report.
Well, there would definitely be a tracking mechanism, because this is a separate assessment from IMRF, and the employee has to apply for it. The district would know specifically what the cost for that. And like Rob said, they have 3 years from the date of the approved leave, and the leave can only be for up to a maximum of 12 months. And once their portion is approved, they have to pay that up front. And then they would send us an assessment also. So yeah, we will certainly report on that to the board. And then if the board determined, we could certainly just remove the benefit.
So,
Go ahead, Rich.
on the leave up to 12 months, so when does this, so they pay up front. When do we pay? So what if their leave runs beyond the 12-month period?
Well, they can only ask for 12 months of service credit. So say they were gone for 15 months. They can only ask for 12, and they have to pay their share, and we pay our share in at the same time that it's approved by IMRF. And well, this would be a blanket approval by the employer, so we would sign in and send in our payment at the same time.
But if they were gone more than 12 months, they would lose their credits then, or?
No. Well, if they didn't ask for it, right. So if you're off on unpaid leave for whatever the reason, and you don't file for this benefit, it doesn't count towards your service credit. So let's say an employee worked for us for 15 years, and during that 15-year period, they were gone for 6 months. They'd have 14 and a half years of credit service with IMRF. And so they could, within 3 years of that leave, ask for that service credit, but they have to pay in their portion, and we would have to pay in our portion.
Just 2 more quick questions, and I'm sure you're going to know the answer. When you keep saying approve, who approves this?
Well, in the past, Okay, so in the past, it would have come to the board on an individual basis?
But let's assume we
Okay.
paid the resolution.
Okay, if you pass this resolution, then the IMRF, so employers are automatically approved then by this resolution. So the employee would submit to IMRF, IMRF would review their case and make sure everything was per the law, and they'd also ask to make sure this resolution was already passed. Then IMRF would approve it and then issue the bill, if you will, to the employee and the employer. It's not until the employee pays that then it becomes official, and then we pay our part.
So there's really not a discretion, just make sure that it fits the code.
Right.
And then once it's rescinded, is there any period that somebody that's on a leave could come back and say, okay, well, I'm gonna try and grab that time?
Yes, so if we had that in place, and then we rescind it, and then during that time that it was in place, they can apply, and the IMRF would look and say, did you have that application in place during that time? And we'd say yes, and that would qualify them to do that. So once you rescind it, you would have that run out window.
And how many times have we done this in the past? Never?
0.
But in 8 years, as I was corrected, yeah.
I just wanted to hit the mic button, so.
I have a question. Is this something that's really common amongst educational institutions?
I do not know that. Rob, do you?
Yeah, I wouldn't know that. I mean, it's a program that's offered through IMRF. I would assume each entity probably does their own thing, but I really don't know if it's common to do it this way or common to do it the other way.
Okay.
So if we don't have a lot of these, why don't we just have them come to the board? I don't know, I'm just,
That was kind of my question. So what happens, what's different if we don't pass this? They just have to come to the board individually and ask every time this comes up?
Each individual one. Yep.
Any further questions? Okay, with that, I'd entertain a motion to approve the resolution to allow the benefit protection leave for the IMRF participants as presented. I have a motion. Do I have a second? I have a motion. I have a second by Mr. Lucetti. If you would open the vote, please.
The vote is open. The vote is unanimous. The motion passes.
Thank you. Moving on for informational items. 8:43 Governing Board meeting from October 27th. Deidre.
Yes. And so we met just this week because we normally would meet the last Tuesday of the month, but the fact that next week we met early. And so only thing that I would like to add to I don't know if the minutes, is that we had a very lengthy discussion, I guess, about this program that has been presented by the Will County Health Department in regards to providing free testing, and we could have a testing site where we could test our students. And I'm assuming that's something that Scott will talk more about. So we ended up having a lengthy discussion because Sarah Rexroth is looking at possibly housing it. And so we brought up a lot of concerns in regards to that. There wasn't a vote on it, but that was just something that was a very lengthy discussion. And of course, I was concerned about the additional liability, of someone, under A43 being responsible for administering COVID test.
Any questions for Deidre? Thank you. Moving on, FOIA requests.
FOIA requests are in your backup materials for your review.
Thank you. Building and grounds.
Same thing, Rich would be available for questions. If anyone has them, simply email and he'll respond very quickly.
Thank you. Community relations.
Pride sheet is in your backup materials as well.
Asset of the month.
Asset of the month for December, hard to believe we're already there, but definition, it's positive peer influence. Young people surround themselves with those who model responsible behavior. Affirm positive friendships without going overboard at school. If I can get my computer to move here, there we go. At school, train students to be peer counselors or peer helpers. Choose kids who can become role models and who are liked by their peers in the community. Affirm and honor the healthy choices that youth make. That would be for December.
Thank you. District 210 advisory.
District 210 advisory had some discussion on moving forward with when we are remote, using snow days, cold days for an e-learning day. And so based upon their discussion, we are going to come back in December we don't have to use it this year because of COVID, but moving forward, if we're going to utilize a snow day or a cold day as a remote learning day, the board needs to approve the plan. So based upon the discussions from District 210 advisory, we're going to bring their discussion points and a plan back to the board in December for consideration. Obviously, the year of COVID, we can go remote anytime. Hopefully moving forward, we'll have to get back to the strategy. If you're going to replace a day, you have to have the plan approved by the board. And so that was their discussion point of whether or not they thought it would be a good idea to utilize an e-learning day in lieu of a colder snow day.
Thought that's going to be one of the lasting effects of COVID is the era of the snow day might be coming to an end.
Right. Save me some phone calls.
Enrollment report.
Enrollment report is in your backup materials as well for your review. Nothing drastic. Once again, just a slight decline as we continue to go through, which is what we had anticipated, and there have been no major shifts from the modeling that we've done in the previous years.
Real quick on the enrollment, when you look at the next, like, I guess 4 years, 8, 7, 6, when you start to add them all up, how many students do we get from like the non-public schools that come into Lincoln Way, roughly?
The trade-off has been about equal in terms of the students that decide to go to a parochial and then the parochial schools that come here. Okay. So there has not been much of a variance at all between the students that don't come versus the additional students we get.
So we just need a lot of young families to move into the district?
Yeah, like I said.
That kindergarten number looks kind of low.
Kindergarten's always a little low.
Okay.
You typically have to look at the second and third grade then to get the trend. Kindergarten numbers, number of families do full-day kindergarten, whether at different private institutions or at a daycare facility. So that number's never been a really good indication, but once they get second, third, and fourth grade, that is. And so once again, I think that it's been pretty, going back the 6 or 7 years now that we've been doing this, it's been pretty consistent. We haven't seen any wild shifts.
Legislative report.
Nothing to report at this time.
Superintendent's district report.
With the district report, obviously we've moved to remote learning. We went 6 weeks of blended, and the first 4 were successful. I would say all 5 to 6 weeks were successful. It does appear that the IDPH model that they provided to districts with the different categories, once you're insubstantial in all those areas, for large institutions, it becomes difficult to continue to operate. The decision to move to remote was was difficult. Nobody wants to be in school more than I do, and many of the board members. But when the spread is as significant in the community as it is, we're just going to have teachers and students that are going to be out. And it's not a cold or a flu where they're out 2 or 3 days. They're out for 14 days. And so, at one point, the Wednesday before we went out, we had well over 30 teachers that were either in quarantine or had tested positive. And while the transmission was not traced back to school in the majority of these circumstances, it's very difficult for us to maintain any consistency in learning when we have that many teachers out, that many students. I continue to talk to superintendents in our area and throughout the state of Illinois. Many are in the same situation we are in. In fact, in terms of large school districts, we stayed in as long as anybody. I'm optimistic that at some point in the second semester, we will be in a position to get in and stay in. Looking at our numbers now, we're at over 500 per 100,000 for the infection rate. I think the target is 50 or less, so that's significant. I would view it as a challenge for us to be able to come back the remainder of this semester. But I'm open to any comments or suggestions from the board. All feeder districts but one have decided to, and either have announced or will announce, they're going to spend the month of December remote and then come back in January, be January 18th. They'll stay out the 2 weeks after. I do believe the light's at the end of the tunnel. Our transmission rate of well over 20% has caused significant challenges. We would have been at over 40 teachers out by the end of the week last week, and that's, once again, that becomes difficult for us for that continuity of providing educational services. Our students have seemed to adapted to the online platform, as well as our teachers. But I'm open to any comments or thoughts from the board as we continue to work our way. We had set the target date to come back, be out the week after Thanksgiving and possibly come back for 2 weeks. But, I think that's looking less and less unlikely with the numbers being what they are right now.
So as we head into Thanksgiving, if we have a projected return date of December 7th, and say on December 3rd, you get notification that 60 teachers are out now, or, when's the decision going to be made to?
That's why I'm throwing it out here for suggestions now. I don't.
So Scott?
Yeah, go ahead.
So Scott, I know, I'm sorry, since I'm not there, I can't flash a light.
No, go ahead.
But what I think is that it's gotten to the point where it becomes grossly unfair to educators. And the students are the byproducts and they're the goal to make sure they're educated. But the foundation and the individuals who make sure they're educated are our teachers and our administrators. And they have to constantly navigate going from in-house to remote. How can you actually develop and do and be the best you can be when we have a record of being the best? I think we are constantly interrupting those that want to be excellent by playing ping pong and going back and forth. This is not going to be forever. This is just right now. And I know there's a lot of things that people are missing out. I understand. I get it. And the numbers are climbing and they're not going down. And if you believe that it's a hoax, then that's fine. Then, but it's not fair to you for that thought process to impact others. And that's my issue, is that I think we are constantly talking about, and I have a student that's it at Lincoln Way East. So this is not coming from someone with no children that doesn't have a student that's in school, that doesn't have a student that isn't in sports. I honestly believe that if we had stayed remote, we probably could have had a semblance of some kind of sports, because honestly, I think we would have gotten everyone acclimated to being remote and only coming in for an hour and a half, 2 hours for play. But that's out the door. So I just think that we have to call it, because we know that if you watch anything, unless you're in a black hole, the reason why the numbers spiked was because there are families who actually let their guard down and allow students and family members to socialize during Halloween. And that's where all the professionals are saying. The same thing, unfortunately, is going to happen for Thanksgiving. And so I think at the end of the day, as a teacher, I mean, I have a student that is impacted. I think it is just so unfair for me to have a high expectation of an educator to come back and forth. Now you're here, now you're there. I think that's unfair. So I think that we have to call it to the end of the year. I know it's your decision. I just think that it's unfair to administrators and educators. And I understand people are listening to the emotions of sometimes of the community, but it's unfair to professionals who take pride in what they do.
Thank you, Deidre. I will say, and then I'll, listen to the board again. Our moderate, our best teachers are the ones that I go to and rely on. And I had spoken to members before we went out, and so many of them were, and those are the ones that want to be in school. They want to be here in front of students, but I think you hit the nail on the head. They felt the continuity of learning, that ability to help the students was impacted when so many students were missing or when they were going to be missing, and I do think it provided some continuity. I do think it's short term. I have faith that we will be able to get back into session in January. I think there seems to be some good news on the horizon, but I agree the next couple of weeks I think will continue to be challenging. But thank you.
So Deidre, just a quick question. When you said through the end of the year, were you talking about the year 2020 or the end of the school year?
I was talking about the end of the school year. I think that it also, because we have holiday trending, I think we should wait at least until right now to the MLK weekend holiday, because numbers they are spiking. So let's stop talking about what is going to happen. So they are spiking, and they're not going down at all. Unless, like I said, you're a hermit and you're living in a hole, then maybe that's what you're believing. But they're going up.
Nobody was arguing. I just wanted to clarify, just to understand, just so I understood what you're saying. So
what I'm saying, the end of this year, but also in coming back, I think we also have the holiday that we still know people are going to gather. So Scott had mentioned, if we come back, that we still go remote until after the MLK. I think we have to at least entertain it remote through MLK to just see where we are, because just the 14-day period, that's how we won't even, if we try to come back on December, I believe like 7th or something, that's not even 14 days from the holiday.
And all feeders have already planned to come back the Tuesday after MLK as well. Not that we would utilize this as a decision, but that would, put a strain on some of our teachers who rely on their kids being in school as well. But once again, I agree with those 6 or 7 days after New Year's Eve. I still think we're in a situation where, we saw the trend coming from Halloween in terms of the first couple of days. We were out that Monday and Tuesday, fortunately, because Wednesday and Thursday, the positive cases started rolling in, and didn't have to contact trace through school then the Monday and Tuesday. But yeah, I agree.
And guys, if we tell our educators, the professionals, that you're gonna teach remotely, they can at least, they can partner with people. They can talk to other professionals that have done it. They could get other ideas. We are crippling them so much by playing professional ping pong with them. I think it's unfair. So I believe that at a minimum, to answer your question, is that I was initially talking the end of the year, but honestly, I thought that Scott had already said it would be until MLK once we came out. So my end of the year was talking about end of this year, the calendar year.
That's what I was
But
asking. You weren't talking about June of 2021. That's
No,
what,
no, no. I was
That's
talking
all
about
I was
the end
asking you, Deidre.
Yeah, the end of this calendar year. I'm sorry.
No, I was just clarifying so I know what your position was. I appreciate that. Anything further for other district business or correspondence? Or any other questions?
I was just gonna ask a question. Are there any changes contemplated to how we do remote learning come the second semester?
Not any changes for remote, Chris. We discussed amongst administration and some teachers the possibility of doing every period every day. But in talking with some students and some teachers, they felt that the model that we have in place, mirroring similar to what we're doing when we're blended, helps. That the belief of having 6 classes for a kid each day and then having to do 6 periods of homework every night would be challenging. But we certainly had that conversation, but it came back to, we thought we should stay with where we are with the remote plan, particularly as the goal would be, optimistically, just to use it the first couple of weeks. Anybody else?
So when would you be looking to make some sort of decision? What's your timeline on that?
Well, I'm not hearing anybody say, we need to stay in, we need to stay in, we need to stay in. So I think looking at the numbers right now, I have my weekly meeting with the Will County Health Department tomorrow morning. I think that we can wait until maybe, I don't know, we see what the numbers are through the weekend, but today we had 14,000 positive cases. I think it's okay to, where I'm at, and I'll meet with my administrators in the morning, but if administration, if the board isn't opposed, I think we go ahead and we make the announcement, as the feeders have, to say we're going to stay remote for the remainder of this semester. The teachers and students are in a rhythm. We're getting close to the end of the semester. This is a short-term, once again, we're looking at this as a short-term adaptive pause to get to the other side of the spike. And I just think with as many people out right now, trying to end a semester would be troublesome for teachers and students. So my recommendation would just be that, we send something out by the end of the day tomorrow that indicates that our goal is now to come back the Tuesday after Martin Luther King Day. This is a short-term adaptive pause. It's not something we want to do, but based upon the situation and the circumstances, it provides the best opportunity to continue effective education for our students. That'd be my thought. Going remote this last time, there were parents that were disappointed. There were several that sent emails or talked to me that said they were disappointed, but they completely understood. Everyone understands kind of what we're dealing with, and my biggest thing right now is some continuity for our students and our teachers until we have an opportunity to get back and stay back.
Yeah.
Yes,
I
please.
mean,
Pull the trigger and make the announcement.
Yeah, waiting until the weekend and those numbers don't mean anything, because there's almost no way you can think that they're going to come down out of Thanksgiving. And so I think you're still going to have the same amount of teachers out. And I think at this point, with finals coming up, or not, however that end up testing, I think you want continuity.
The change that we did make is putting the office hours at the end of the day. Our prior model had more time in the morning for office hours and prep time. Now that's in the afternoon, and we've identified every student in the district that is currently failing a class, and that 2 hours in the afternoon is being earmarked for intervention time with those students, any students that are missing assignments. It allows the teachers to open up their WebEx and help individual groups. We're even to the point where we're inviting certain students into school between 1 and 3. They're not with everyone else. If they have to come in and take a test or work on an assignment that they missed during that remote time. So we're doing what we can to try and mitigate failures. That superintendents across the state have been talking about the failure rate, and it is higher than what it's been in the past. I mean, it's a byproduct of not being able to see students every day and work with those students. So we're doing what we can to intervene, and I think that having the time in the afternoon for those teachers to directly contact those students will be a little bit more successful. So that was one change to remote.
Is a plan figured out? Do you have a plan in place, I assume, for finals, since if this is inevitable?
Yeah, so very early in the process, we gave teachers the option. Not every teacher is going to be right there at the place to give their finals. And so this year or this semester with our grading, it'll be a cumulative grade in terms of total points up until that point, instead of the certain percentage for the class and a certain percentage from the final. And some teachers are still going to give a summative test, and they'll be able to determine what percentage they want to earmark for that test. I've been really impressed with some of the teachers. I've been able to jump into some classes here over the last week, and different teachers are doing tests different ways. I was in a Calc AB class where the test was open today at 3 o'clock. They get a 3-hour period from the time they open the test, but it has to be completed by Sunday night at 8 o'clock. They can use their notes and calculator. They can't use a friend. If they choose to use a friend, they may help their grade, but they're not going to help themselves on the AP Calc test that they'll be taking in May. So our teachers have become very creative with their assessments and really done a good job. I can't say enough about the way they've been able to handle this bit of adversity and continue to provide instruction. But the testing now, the students and the teachers have gotten better accustomed to working their way through, and the students that want to do well on those future tests know that they've got to learn the content themselves, and so it's going okay.
Excellent. Anything else? And there's no other district business or correspondence? No. With that, I'd entertain a motion to go into closed session to discuss the appointment, employment, compensation, discipline, performance, or dismissal of employees, collective negotiating to establish the sale or lease price of real estate, and consider sale or purchase of securities, investments, or investment contracts. Do I have a motion?
So moved.
I have a motion. Do I have a second?
Second.
If you'd open the vote, please. Okay. Aye. Anyone opposed? The ayes have it unanimously.